Hey guys, Akil here. Welcome back to the Trading Coach Podcast. Got another very special episode today, sharing with you another segment from a recent interview I did with Dennis Wilbon and Michael Lamont on their Trading Truths podcast. Today we're going to talk about the stages that a trader goes through and the pros and cons of running on autopilot, right? Autopilot is where we eventually want to get, but maybe it's not as good as we think. And we'll talk a little bit about that. Now, if you haven't done so already, make sure you check out the Trading Truth podcast. It is an amazing show, and you know so because that's coming from me, and I don't lie. Also, make sure you register for our free online trading workshop. It's coming up very soon, starting August 13th. You need to register. That way we can shoot you the link for how to log in, and that way we can email you the recordings after each session is done. If you haven't been to a workshop of ours, ask about it. It is amazing. Anyway, let's hop into the podcast episode.
You utilize in your coaching the concept, the hierarchy of competence. Yeah, and it's similar to the Dunning-Kruger effect. Can you walk us through what a beginning trader, where he starts or she starts, and those aspects of the hierarchy of competence and or the Dunning? Because you and I had a little bit of a joke about people who get stuck on top of Mount Stupid, and
Love that.
because
So I love that. That made my day.
anyway, so yeah, so how do you utilize that in your coaching, and how can somebody use that for both trading but also life?
Yeah, I think it's very similar in both, and obviously it wasn't created for trading; it was created for life in general first, and it's kind of been adapted to trading and really anything in life. But I think it's important, just first and foremost, to be aware of the stages you have to go through. I always think like if a blind journey is a lot harder than like a guided journey, meaning like if you have a map that tells you, you know, you're starting here, you want to get there, but you got to cross this path and duck under that and avoid this monster. Like at least you know, so it's not like a surprise. You get into trouble when there's a surprise, and you quit and stuff like that. So I think it's important to understand these concepts, and the four stages are. It's always a struggle for me. It's unconscious incompetence. There is conscious incompetence. There is conscious competence. There we go. And then there's unconscious competence. And the unconscious incompetence is you don't know what you don't know. I'm a father of two used to be younger kids. Now they're older now, 9 and 5. But you learn this growing up with kids that they don't know what they don't know. My kid is going over to touch a hot stove and I'm pulling his hand back. And the first thought that goes to my mind is like, you idiot. Like, why would you do that? And then I'm realizing like, he doesn't know it's hot. He's never experienced this. Dad has burnt his hands and learned. So like, you can't fault them for not knowing what they're not knowing. And in the trading world, this is, you usually fall in love with the first thing that makes sense. And unfortunately, we spoke about there's so much junk out there and so many myths out there on the internet that you hear something and you don't know if it's true or not. I'm not smart enough to do this, so I guess I'm not. And you believe it. Once you make it past that stage, if you make it past that stage, you can be stuck on that stage and just get defeated and quit. And a lot of traders do that. However, many traders will start asking themselves, okay, like, I understand that I don't know what I don't know. Like, I don't understand this stuff. And then they embark on the journey of, okay, well, how can I go about understanding it? And this is like that search for knowledge. And again, it's podcasts like this, it's the internet, it's YouTube, it's books, wherever you want to go to, but they're on this search for knowledge and they're trying to acquire as much information as possible. And again, there are some, downfalls of that as well, information overload. And then like we talk about, there's so many terms that it just gives you mind fog, but at least you're trying to learn. And that is going to be that conscious incompetent stage where you're aware that you don't know. So the first stage is, I don't know what I don't know. The second stage is, I'm aware that I don't know stuff and I need to go learn it.
Right.
You learn that stuff. And this stage can take a while because you got to learn stuff. You got to separate the good from the bad. And it takes time. Then you're in that conscious, I just always want to get wrong. You're in that conscious competence stage where like, I know what I'm supposed to do. Doing it, that's a different story. And we see a lot of that with trading psychology, where I'm sure you guys work with a lot of people where it's like, I was supposed to take that trade. Well, why didn't you? Well, I got a little scared, or I got a little greedy and took that trade when I'm not supposed to. It's working out the trading psychology aspects of it, and then finally the golden stage that you want to get to. This is the unconscious competence. This is when you know what you know, and you know it so well you're on autopilot. So we spoke
Yep.
about being football players earlier, and this is like Tom Brady at the end of his career, or Peyton Manning, where they can just like they've seen every single defense before. They don't even know they're going through reads. They just drop back and they're automatically doing it. The ball comes out and it's a touchdown. And it's like, Peyton, what did you do? It's like, I don't know. I just, they're like they're robots. And
Right on.
this is where like trading gets boring, where people say like, oh, trading was boring today because you're coming in and you're doing the same routine over and over again to the point where it's just like it's just a habit. And that's the ultimate level you want to get to.
Do you think that the habits ever need to change when you get to that level, or is it kind of you're in there, or what have you experienced?
I think a little bit of both. Because the we always want to learn, and we always want to challenge ourselves. It's kind of like Mike, for a running example, right? If you run at the same pace every single day, or the same route at the same pace every single day, the same amount of time every single day, you're not really going to grow anymore. You're going to become stagnant. And when you become stagnant in trading, it can be dangerous because market conditions are always changing and they may outgrow you, and you might start going backwards and not even notice it. So I think you always need to kind of test yourself, run a little bit faster, run a little bit further, put a little bit more weight on it, or switch the workout up entirely just to kind of keep you alive. And I think trading is the same way. So me, I'm a student of the game. Like I dedicate a certain time in the year each year to what I call continued education, where
Cool.
I just learned something. Like it could be I learned Elliott waves years back. I learned about volume, like stuff maybe I don't even intend on using. I just learn it, or I'll go on like a strategy development journey where I start looking at the markets and I'm like, wonder if I can build a strategy. And like 9 times out of like 10, they never come out to fruition. But it's that exercise of like doing something different. I feel alive. I feel stimulated, and it keeps me sharp. And in many cases, even helps my the stuff that fails. Right? Maybe I learned something and it helps the trading style that I do. So it's you always got to stimulate yourself and find different ways to stay sharp and feel alive, because you don't want to go backwards in these markets.
Absolutely, and you have a dedicated time for when you're going to do this kind of education.
Yes. Yep.
Do you have you have a dedicated time? Do you have a dedicated period of the year? Like I'm a big watcher of seasonality, and there's certain times of the year where things are slower in the markets than others. Do you plan around those slow periods in the market to do your additional education?
Yes, 100%. So for me, it's typically it's always in the winter. So after Thanksgiving, during the Christmas holidays, because I can care less about the markets in December for the most part, maybe like the first couple weeks. But once you get around the holiday season, it's there's not much that I really want to be involved in. And then the summer as well. There's usually a summer slowdown where it doesn't necessarily mean bad trading, but things are a little bit slower. This has been a exciting summer because there's so much going on. But usually those times are best for me. Plus, during the winter break and during the summer break, I also have a break from track and field if the kids are on summer vacation or winter vacation. So I just have a lot more time that opens up for me to kind of use it. So it's kind of cool that it kind of works in the same area.
Oh, that's great. And both of you, and I try to do the same thing too, having these dedicated times. And I think that that's an important thing to highlight, because if you don't have dedicated periods and you're just kind of learning here and there, and you're all over the place, then it could be very easy for education to become a distraction, if that makes sense.
Yeah. So yeah, I had a really young man this past week who we were talking specifically about that because he's going to become an autopilot trading member, and he was listening to because I also host the Bay Area Moneymakers, which is an IBD meetup group, right? And I had a really good guy, Lee Tanner, on. Really, Lee's a brilliant trader, been one for a long time, but he was getting into complexity. And this young man told me, Dennis, I had to turn it off. I had to turn it off. And I give the young man kudos. He goes, I had to turn it off because what was being presented was overload with what I needed to be learning right now, which I needed to be learning your system and become a master of that. And I went, whoa, he's the first guy in 15 years that has said, oh, yeah, I had to shut off the noise. And he's going to do really well.
Yeah,
The
that's a great lesson to learn.
Yeah,
That's a great lesson to learn. Not too many people learn that one.
yeah, even me. I mean, gosh, you just so much of, my first 10 years of trading, I was that stubborn, egotistical guy. I was a jet pilot in the Navy, and all this stuff that, and so I thought I was pretty hot stuff. And I look, an engineers are sometimes the worst. They really are. They get on top of their ivory tower and they think, oh, I'm brilliant and I'm going to recreate this trading system. And the dumbasses, if they would just basically just follow the simple processes. And that's what I finally came back to and started developing about 15 plus years ago, the clear and simple process, making it simple, all my rules on one page. I want to go back to the Dunning-Kruger effect just really quick. What strategies, Akil, would you suggest for traders to implement to overcome the overconfidence or self-doubt associated with Dunning-Kruger, especially when they get to the valley of despair, which so many people turn back from to chase the Holy Grail? Well, that was a really good question.
That's that is. I'm like my gears are churning. I think I think a lot of it goes into self-reflection. I look at my journey and when I hit that valley of despair, and I was, I was overconfident in the market. I didn't think I was the smartest person out there, very far from an engineer, but I was overconfident. I did really good in the stock market when I first got started, and I'm like, I'll figure this out. I'm smart enough, and it just didn't work. And I remember blaming everyone but myself. And then I ran out of people to blame. And I remember looking in the mirror one day, and I don't know what I was doing. Probably the day I just was about to blame someone. I was like, that doesn't make any sense. And I just said it was me. It's me. And I started asking myself, okay, it's not my strategy. I went back to my numbers. It's me. And I did an A/B split test where I took the results from my trading strategy and what they actually were, and I compared them to what they should have been if I did everything correctly. And I said, oh crap, like this is a profitable strategy. It's me. I'm the one messing it up. And then I kind of reverse engineered from there, where I started identifying what was causing me to lose money. Well, it was mistakes. And then identifying, okay, what were those mistakes? And I remember the turning moment in my trading is I made this goal. I said, okay, I'm probably making like 30 mistakes a month. I'm not going to eliminate 30 at all or all at once. That's just impossible, right? I learned that from sports. If coach tells you 80 things to fix, you're not fixing 80 at once. I said, January, I'm going to at least make one less mistake. So I want to end January with at least 29 mistakes, but not 30. And then I just kept working that number from there. So whatever I had in January, let's say I had 25, my February goal was like, okay, no more than 24. 24 is the max. And then I started throwing in, trying not to make the same mistake twice. So if I moved the stop loss back because I was scared, okay, no moving stop losses back. And it's funny, you talk about autopilot. I kind of got on autopilot. I forgot I was eliminating mistakes, or I forgot really about my trading. And my whole focus was on don't make mistakes, don't make mistakes, don't make mistakes. And I remember this was the coolest part of my journey, where you get the broker statement every month. So I got the email and I clicked at it, whatever. I'm used to seeing things in parentheses, right? And meaning that you lost the money. And I remember I looked at it and I'm like, there's no parentheses here. And I remember I emailed my broker. I'm like, hey, I think you sent me the wrong statement. Like, just as a heads up, like someone out there made some money and they probably don't know about it. And they emailed me back, hey, Akil Stokes, account number, blah, 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 blah. yeah, this was your profit for the month. And I was like, positive? What? What the? And it came to me. I'm like, man, I just, my trading got fixed, not by necessarily doing something super secret with my strategy. I just stopped stepping on my own feet. I became more humble. I really locked in on the process. I discovered what was holding me back. And I became on autopilot for what I was supposed to do in the markets. And the result was profit. And that belief hasn't left me. It was that one moment where I had that belief. I'm like, this is what it takes. And I've never looked back from that. Hope you guys enjoyed the show. I love the support. We started, I don't know how many years ago, but some random little podcast where this guy named Akil came on and ran his mouth. And we've worked all the way up to being one of the top trading and Forex-based podcasts out there, which is amazing. But we're not number one. If you search it, you will see that. I want to get there. So do me a favor. Give me your support. Leave me a rating and a review. It takes a minute. You can do it while you're listening to the next episode. And also make sure you share this on your socials. That way we can continue to connect with your trading buddies and continue to look at new, cool topics in the trading space. All right. Until next time, plan your trade, trade your plan. Take care.